Managing Director, Portfolio Manager at Principal Global Investors, joins us from Hong Kong. Binay, thank you very much for joining us. So first, that global question, from your convenient perch, you can tell us, is the near-term scare over? Time to start mending and picking bargains?
Well, we started off defensively this year, given the macroeconomic concerns that the economy faced. But we always believe that there's always good time to pick stocks which get sold due to macroeconomic conditions. Companies which have the ability to grow earnings, which have the ability to do well during difficult environments. So our advice to long-term investors is always to use market setbacks to go back to weight in their asset allocation portfolios.
Okay. Binay, hi, good to see you in today. First, just wanted your opinion in terms of flows, because in the month of January already, we've seen at least around 9 to 10,000 crores of FII outflows taking place. They've not been buyers except for one session, which was on the 2nd of January. Your view in terms of what FII's view would be towards India and maybe the flow picture?
Yeah, Indian markets have not done very well in the last 6 months. They have generally disappointed. But if you weigh that in the context of what's happened in global emerging markets, India's performance is fairly decent. Now, if you look at the FII picture, emerging market equity funds have lost more than $60 billion in the last 12 months. India, being a substantial overweight in emerging market portfolios and Asian portfolios, had to feel the pain of that as well. The other thing which could be worrying FII slightly is the fact that earnings growth in India was revised down by about 20% last year. Growth expectations were fairly lofty. So I guess there's a bit of a wait and watch attitude at a time when the global cues are not positive, at a time when India's earnings have generally disappointed in the past 12 months. But still, India still remains one of the more favored markets in the emerging world.
Okay, what are your near-term views, or maybe slightly longer-term views on India? Are you expecting that this year the equity markets can give us positive returns? What is it, 10%? What are you looking at in terms of investments in India?
Yeah, India is a very strong structural story. Demographically, it is very, very strong. It provides the largest chunk of workers to the rest of the world in the next 10, 15, 20 years. So it's very important for India to get the right structural reforms going. And we have seen evidence of that process start in the last 1 or 2 years. So that is positive. In terms of what FIIs would need to see is earnings growth. As I said earlier, earnings growth have been disappointing. But starting with this quarter, you're seeing some signs that earnings growth could bounce up. The expected earnings growth on the street is about 15 to 16%. I think if India can even deliver 10% as compared to -6 or 7% last year, Indian equity should deliver positive returns.
Okay. Some news coming in. Moody's puts ONGC's ratings under watch for a possible downgrade. So under review is the verdict at the moment, not yet downgraded, but the stock is at the moment undisturbed. We have to see whether it can hold up its chin. Binay, speaking about leveraged entities, what is your opinion on the private sector and public sector banks? Public sector banks have been bashed up, and they got bashed up more. The private lenders stood out for a better part of 2015 and joined the ranks of the battered in the last few weeks.
Yeah, private sector banks were the most preferred sector as far as most foreign institutional investors were concerned, because they were delivering pretty strong earnings growth. And the outlook from a forward-looking basis was pretty strong. So it's like, I'm not surprised that at a time when Indian markets have got sold off, that sector has also got sold off, because you sell what you've invested into in the past, right? As compared to public sector banks, we still prefer private sector banks because we think they present a much better earnings story. For the public sector banks, the big issue is one of NPLs and an issue about recapitalizing them. They will need a lot of capital to get back to the required capital levels, and therefore, while they're very, very cheap, the preference is still for the private sector banks.
None of the public sector banks, not even the biggest of them?
Well, generally, as an asset class, we prefer private sector banks, but of course, there could be opportunities in that space where you feel that the valuation reflects enough pain, or there is enough distance traveled in terms of addressing the capital levels. That is something which our analysts who are based in India, and of course our analysts based in the global emerging market team, they will always be on the lookout for.
Okay, well, just a couple of more details with regards to ONGC, where Moody's reviewed 7 South and Southeast Asian energy companies for a downgrade, and ONGC is a part of that sort of review which they've undertaken. So it's for 7 South and Southeast Asian energy companies at this point in time. Binay, just your thoughts with regards to the currency, because that seems to now be playing a larger role in terms of determining the equity market movements. We've seen that with the Japanese yen and the Nikkei most recently. Your sense in terms of which currency will possibly see the maximum appreciation? Are you long dollar in 2016, or what would your view be?
Yeah, we are still long dollar. We've been long dollar for about a year now. Having said that, some of our dollar enthusiasm has waned a little bit in the last 3 to 4 months. So we are now in our portfolios long dollar versus the euro, but we took out the long dollar versus the yen weight late last year. We still believe that dollar will appreciate against Asian and emerging currencies, but not at the pace at which it appreciated last year or the year before last. At some stage, as you work through the problems that emerging markets are facing, especially the ones which supply commodities, their currencies would have cheapened enough, and therefore there'll be value in them. If you look at currencies which have cheapened really a lot in the last 2 or 3 years on a real effective exchange rate basis, then the Malaysian ringgit in Asia, the Indonesian rupiah, then of course the Brazilian real, the South African rand, all of these currencies can come back into contention, but of course you need a much better macroeconomic backdrop, and of course you need commodity prices to recover for investors to start looking at these currencies.
Okay, we'll discuss those prospects some other time. Thank you very much, Binay Chandgothia, for joining us with your thoughts this morning. Okay, we have to take a quick break. We have a couple of more guests to speak with. We'll do that when we return.